Eric Mwathe at mwathe.com. May 7th, 2016. Let's take a look at MGT. And of course, this is one we've been watching here since the move from about 30 cents to the highs here of about 550. And this is good enough for about % gain. So this is probably one of the most explosive instruments that we've seen in the market over the last couple of weeks, maybe even over the last couple of months. Huge move. So now the question is, how would one play this after such a big move? Of course, the stock has moved from 550 all the way to the lower $2 area. Anybody who wants to play this, of course, can use the breakout method, and this is what I want to discuss here. And what we can do here is use this recent weekly closing high now that we've had 2 weeks of rest. In fact, let's take a look at a same chart on a weekly chart. So the previous chart was 2-year weekly, so as not to confuse us. 2-year weekly. And now what I'm going to do here is just zoom in a little bit, and what we have here is 6 months weekly. So just to be clear, all right? So that's what's going on here. And what I want to show you here is, because we've had 2 weeks of rest since this closing high, and that closing high is your buy point, and your trigger point for a breakout is at 2.90. This close right here on a weekly closing basis. Any movement above that is going to be a legitimate breakout. Why? Because we've had week number 1 of rest right here, and then week number 2 of rest, which is last week right here. So now any breakout is going to be considered at the very least week number 4. So if it breaks out this week, we are going to call this week number 4, because the way we count this is we start with the close. And then on a weekly chart, we always want to insist on 2 rest days. So rest day number 1 is the red bar here. Why is it a rest day? Because it's below 2.90. So it's resting since that close here. And then of course we have rest number 2 on a weekly chart, which is this rest here. Why? Because it closed below 2.90. You need those 2 weeks of rest for the stock to digest itself and to balance out, you know, all the forces, if it is to break out and have a fresh move. So we need 2 weeks of rest. We've seen 2 weeks of rest. So now any breakout going forward, starting from this week, is going to be legitimate, because we've seen the minimum requirement. So again, if you are wanting to time this, this is where you wait for this breakout above 2.90. Just wait, set an alert, and wait for it to play out if you are looking for momentum. Otherwise, you ignore the stock. One of the things about the breakout method is it buys you patience, because you have to wait to see the stock move above 2.90, suggesting that it might be attempting to move again. Otherwise, you ignore. And this method keeps you out of owning stocks that eventually do nothing. So it's either it is breaking out and moving higher, or it is not breaking out and you ignore it. Now keep in mind, if it breaks out and rolls over, that's where you need to set that 5% stop. So it's a simple strategy. Here, the most recent weekly closing high was 2.90. We were waiting for 2 weeks of rest. We got that. So now any move above 2.90 is going to be legit, and we can use that as an entry. Now that is the breakout method. If you really wanted to chase this and try to start building a position before any potential breakout, you can use the daily. And this is the daily. Of course, you can see the explosion, and the explosion on the 1-year daily began during this move here. And we've talked about this before, RSI breaking out above the previous line connecting RSI highs. So that breakout coincided with the price moving above about the 0.25 level or 25-cent level, and an explosion in price did ensue. So what we can do here is simply extend this blue line, and you can see as of right now we have double bottom support or double bottom back test successful move. And what I'm talking about here is this support on a back test, which is good, showing support on that line and then support again. So if you are looking to take up a position before any potential future breakout, you'd want to take out a position here, or take up a position here, because it is showing support on a line that has previously been very successful, in that once it moved above the blue line here, we had an explosion. It's worked its way all the way back to test the same line, held, came back, tested it again and held, hence the double bottom. So that's good. There's another view, and that view is also based on the previous entry, and I'll show you that in a second. So we draw this line here, and we know that if we draw a line from here, a horizontal line, that line is consistent with this entry. So once the RSI jumped above that, we had this explosion again, and so we can see here we are having another evidence of double bottom support on the line, or the uniformity line. So every time we have uniform activity on this line, we get a bounce. So right now, anybody who wants to buy this with the thinking that eventually the stock might break out, this two lines, so line number one is the one you see here, and the other one is the previous blue line, because all of them are showing support with double bottom. This is where you want to take up a position. So again, double bottom, we change that a little bit, so double bottom support there and there. As long as the stock is bouncing on those two lines, you have to assume the stock eventually moves higher. And here, just to summarize this is gonna be considered a sell signal whenever the stock fails, if it fails to hold above those two lines. So that could also be a visual cue to get out of the position. So for now, you have two methods. Method number one is the momentum chasing method. So momentum is to wait for the breakout above 2.90. You have to wait for that if you want momentum. If you want to get in before, while the stock is still sideways here, consolidating itself, digesting its huge move, then you want to use this method here, which is what I call the uniformity method, based on the RSI, or in other words, using the RSI to figure out where you can take up a position. And this is where we see that it is bouncing on the two lines. So you can either use method number one, wait for the momentum, or take a position here using method number two, or you can use both methods. Take up a position here, maybe let's say a third of, if you wanted to buy 100 shares, maybe you can buy a third of your position here, buy another third if it confirms, if it moves slightly higher, and buy your last third position when it finally breaks out above 2.90. Eric Mwadet, mwadet.com. Of course, we'll see how it goes. Good luck, peace, and blessings. E-A-C-S.